Welcome back to the channel, ladies and gentlemen. Today we are going to bring you some Bitcoin and some cryptocurrency news. Currently, Bitcoin's under attack in the UK. We're going to be talking about that. I believe crypto's under attack inside the US. I'm going to show you something very important there. Also, we're going to be talking about the Russia-Ukraine conflict and how it affects the overall crypto markets. If you want to try to be prepared, if you want to have the latest information to mentally prepare yourself for the coming cryptocurrency market, make certain you continue to watch this video. Before we get started, let me just say this. I am biased overall on cryptocurrency. I believe in the future of this technology, and I believe that we are in the early stages of a cryptocurrency revolution right now, right here. On my channel, although I am biased, I try to be objective about my content. I will share my honest opinion as best I can. I will tell you the pros and the cons. You will never hear strict moon talk on my channel. I try to share the good, the bad, and the ugly in every project that I'm invested in and every cryptocurrency that I'm also invested in. If you can appreciate that kind of honesty, do me a favor and smash that like button. And the subscribe if you don't mind. All right, so let's go ahead and get into this quickly. Just take a quick look at the top 10 here. Bitcoin is down a little bit. It's been down in the 7-day average. Nothing crazy, but it hasn't moved towards that new high. We had a little bit of a blip above the 40,000 mark, but it's just not moving higher. I think the Ukraine conflict, some of the inflation numbers, everything that's happening, we'll share some of that in this video. I believe that we're literally seeing mass adoption play out right now in real time, and we're seeing traditional markets and crypto markets kind of fight back and forth, and now we're seeing politicians creating narratives around cryptocurrency and quietly, almost sneakily, if you will, is that even a word, sneakily? Almost sneakily trying to slip in regulations, and I think we need to pay attention to this as cryptocurrency investors. Ethereum, not a whole lot of change there in the past 7 days. Everything's looking pretty good. It's just stagnating. It's just sitting still. I've got some Terra Luna content coming out a little bit later on this channel. If you like the Terra Luna ecosystem, be sure to subscribe. All right. Also, towards the end of the video, I'll share with you some of my overall philosophy, because I think we are headed for some extremely choppy cryptocurrency markets. And if I had to say that I had a bias, I think the bias is downward. But with that being said, I'm still investing. I'm making new investments literally every week and sometimes every couple of days in cryptocurrency. The question is, what am I investing in, or at least what are my thought processes when I'm investing? And I'm going to share that with you towards the end of the video, so stay tuned for that. Let's go ahead and get into some news. This is big news. This is a big deal. Bitcoin Cash machines ordered shut down in the UK. This isn't Bitcoin Cash like Roger Ver's project. This is Bitcoin ATM machines are ordered shut down in the UK. A lot of people like to say that Bitcoin can't be shut down, and that is true. The government cannot stop a decentralized blockchain, but what the government can do, and I believe that they will do, is they can restrict access to on-ramps and off-ramps, meaning the way people get dollars to crypto and the way people get cryptos back to dollars. And that's exactly what Bitcoin ATM machines do. They allow for people to easily, it's another method to be able to buy Bitcoin or to buy other cryptocurrencies. And this has been a growing trend. And I said it early on my channel, probably about 3 years ago, 2 or 3 years ago, we started seeing news stories about how new Bitcoin ATMs are showing up everywhere. And I said back then, this is something to watch. I don't believe this is going to go on for very long. I still believe that, and I believe that we could see something like this happen here in the US very, very soon. Again, when they shut down these ATM machines, they always do it claiming that it's for the protection of the people. Crypto ATMs look like regular cash machines and let people buy cryptocurrencies such as Bitcoin using their bank cards. But no company offering cryptocurrency services in the UK has a license to operate a crypto ATM. The FCA said all such machines must be shut down or will take action. I think it's interesting to point out that they didn't take action. These ATM machines have been around for a while, and they're just now saying something. I think this is kind of in line with what we're seeing with the larger economic picture around the world. I don't think this timing is accidental. I think there was some urgency because they're starting to have to crack down on cryptocurrency, and I think more potential crackdowns, although I think they'll be somewhat subtle. We're going to see more and more crackdowns coming literally in the next 12 months. The FCA said, "We regularly warn consumers that crypto assets are unregulated, and high risk means people are very unlikely to have any protection if things go wrong. People should be prepared to lose all their money if they choose to invest in them." This is the government saying, don't worry, we've got your best interest at heart. We're not looking out for the large money donors who are trying to protect our political futures. We're really just looking out for you. No, they're probably looking out for the bankers. They're probably looking out for old guard finance. This is ridiculous. They always bring out restrictive regulations, taking away our options, taking away our freedoms, and they always do it under the guise of our protection. Let me ask you a question. How come they don't stop people from gambling in casinos? If they're so worried about people losing all of their money, why aren't they stopping people from gambling in casinos? There's sports books all over the UK. Next up, Russia could use cryptocurrency to blunt the force of U.S. sanctions. We've talked about this on my channel almost since the first day these sanctions got announced. Russian companies have many cryptocurrency tools at their disposal to evade sanctions, including a so-called digital ruble and ransomware. When the United States barred Americans from doing business with Russian banks, oil and gas developers, and other companies in 2014 after the country's invasion of Crimea, the hit to Russia's economy was swift and immense. Economists estimated that sanctions imposed by Western nations cost Russia $50 billion a year. Since then, the global market for cryptocurrencies and other digital assets has ballooned. That's bad news for enforcers of sanctions and good news for Russia. Not only is it good news for Russia, it's good news for anybody who wants to have more freedom with their own finances. So again, the problem with this headline out of the New York Times is if you're not careful, you can read it like, oh no, cryptocurrency is bad because it's allowing Russia to have access to these sanctions. Listen, I don't like anything that Russia's doing, but let's be very clear here. Russia has money, their own country's money in their own bank accounts, in offshore accounts, meaning they have a development fund. Part of these sanctions, the U.S. government went in and took that money, or at least blocked their access to that money. Although I don't agree with what Russia's doing in the world, it's if the U.S. government can easily block or take somebody's access away from their own money, what could they do to their own citizens? Like that is unprecedented, and we covered that on this channel, but it is unprecedented. It is highly unusual, and it's even more strange that nobody's actually talking about how unusual it is. This has never happened in the history of the world. It's never happened since the U.S. dollar has been the primary economic instrument in the U.S., meaning the U.S. dollar has been the world reserve currency. It's been considered a safe currency because people thought the U.S. government would never do that. It's kind of crazy stuff, ladies and gentlemen. But this is interesting. So how do politicians respond to this? Which, by the way, it's not shocking that Russia is using cryptocurrency to get around sanctions. We talked previously about how Iran's already been doing it. Like they've been doing this. In fact, I think China's already doing it. We may actually see India start doing it as well. Stay tuned for that on another video. But the U.S. can't stand for this. So we've got very strong politicians like Ms. Elizabeth Warren here, who's obviously extremely crypto savvy. Doesn't she look like the target market of a cryptocurrency investor? I mean, if you look at the analytics on my channel, the average cryptocurrency investor is under 35 years of age, and they're almost 96% male. That's just based off my own analytics. Well, let me ask you this. Do you think that she's so intelligent when it comes to cryptocurrency and that she's so astute on this technology that she spends hours researching it like I do and maybe like you do? Do you think that she's looking at incredible videos on cryptocurrency, videos like mine and others? Or do you think that she has some very high-powered bankers paying her because this woman, without question, is the #1 senator in Congress right now, constantly pushing for regulations on cryptocurrency. But of course, she wants to do it, and she wants to protect you. Or she wants to protect the bankers that continue to back her, who continue to lobby her. Warren crafts bill targeting cryptocurrency in Russia sanctions. So this is a bit of a bait and switch because the reality is, what in the world can the U.S. do to stop Russia from using cryptocurrency? I'll tell you, almost nothing. But if you come down here, here's what this is really all about. One of the draft provisions in Warren's proposal would seek to make it easier to verify the identities of customers and transfers to private crypto wallets by requiring financial institutions to keep detailed records and submit reports to the Treasury Department. The Treasury Department's Financial Crimes Enforcement Network, known as FinCEN, is in the preliminary stages of drafting a similar rule, but Warren's bill would codify that requirement. Ladies and gentlemen, they want to know exactly who you are, where you're spending money, every single dime, every single dollar. When you combine that with something like a social credit score, which is coming, when you can attach transactions to a social credit score, when people buy things that you deem are good for the economy, they get a positive score. If they buy things that the government think are bad for the economy, then they get a negative credit score. That is where this is headed, ladies and gentlemen. Let's keep going. And Russia-Ukraine war could bring Biblical event as global wheat supply disrupted. So here's the challenge. Cryptocurrency is going to be very, very choppy. And let me just explain why. The main reason it's going to be choppy, meaning the price action is going to be very choppy, up and down. It's going to be very volatile. We're probably going to have higher inflation coming. Even if it stays on par, you understand, like, the current inflation numbers are insane currently. I mean, they're talking about, the government likes to see inflation rates around 3%. And we're looking at right now 8 and 9%. That means that your money is devaluing at 300% faster than what the government wants it to devalue. Meaning that last year, if you had $10,000 in your bank account, this year, your $10,000 will buy 8 to 9% less goods and services. And it's possible that we're going to see double-digit inflation. In fact, I think it's probable we will see 10, 11, 12% inflation this year. Ladies and gentlemen, you understand that is catastrophic. That really is catastrophic. And I don't mean to be the bearer of bad news. I think it's important to understand what's coming and make your plans accordingly. Like all of my businesses, when I'm talking with my clients, any consulting that I'm doing, I'm telling people how to prepare your business for weak economic times, because that's what we're having ahead. As an investor, you have to do the same thing. You have to say, how do I adjust my cryptocurrency portfolio based on what's coming ahead? A big portion of the wheat that the world uses comes out of Ukraine and Russia. Obviously, that's getting disrupted. But it's more than wheat. It's also corn. It's going to be potentially some dairy products. And when these things are disrupted, not only is it just the grains, but everything that those grains are used for. Cooking oils, for example, go up. If cooking oils go up, that means your restaurant and your food prices, anywhere where they pre-prepare food, those prices tend to go up as well. If corn goes up too high, raising beef cattle gets expensive. And if raising beef cattle is expensive, then all of a sudden your meat prices go up. That's exactly the effect of inflation. So we're having two things happening right now. We have supply shortages, which are causing rise in prices, and we have inflation. Inflation meaning that people's money is not able to buy as many goods and services. This creates very difficult economic times, and it creates a bit of a domino effect that's probably going to continue a while. We're going to see more supply chain shortages. We're going to see businesses hurting because people aren't able to spend money with those businesses. All that's coming. But what does it mean for crypto? We're going to talk about that a little bit more. Let's keep going. U.S. inflation rises to 7.9%. I said that before, just to put that into perspective. We've not seen inflation this high basically in 40 years. The challenge is a lot of people right now, particularly in the U.S., even though they're seeing gas prices go up, even though they're seeing grocery prices going up, nobody's really feeling this yet because we're not seeing the job market crash. We're not seeing governments cutting stimulus, but the government right now is looking at raising interest rates. And the only way to combat inflation, or at least the easiest ways to combat inflation, is either increase taxes, which sounds like a bad idea, or raise interest rates. Both of those take money out of the system. That's how you combat inflation. The problem is, in both of those scenarios, they also help bring about an economic crash. No matter how you look at it, we're between a rock and a hard spot. It's a be damned if you do, be damned if you don't. And I believe that if we see that economic crash, I'm predicting it. I will go on record right now on my channel. You can bookmark this. You can save it. I believe we're going to see a much weaker 2022. A full-blown recession. I believe that we'll have a full-blown recession before the end of 2022. I'm calling it now. Overall, this is going to affect crypto pretty negatively. We're going to see prices pulled back, but there's something that I'm seeing right now, and it's that more and more people are talking about the fact that Bitcoin could be a potential hedge. Now, the early creators of Bitcoin always wanted Bitcoin to be a hedge to the US dollar, to inflation, and at this point, it never really has been. Now, we're literally watching mass adoption take place right now, because as you start paying attention to the news headlines, I think it was in the UK, they did a survey, and wealth managers under like 50 or something like that were saying that they saw Bitcoin as a viable asset class. And then there was like in India where they said investors under 35 said that they felt like Bitcoin was important to hold in their portfolio for a potential hedge. Like, that's when you just see a sentiment like that. Now, these investors that you're seeing in India, for example, that are 35, well, when they become 45, they're probably still going to think that. And that's going to start shifting the narrative. Like, we're literally seeing an acceptance of, hey, cryptocurrency, this thing might actually be a better hedge. And I believe the higher inflation goes, the more people are going to look at alternatives. And so you're talking about gold, silver, real estate, and cryptocurrency. Here's the problem. Of those four assets, only one allows relatively fast, quick, easy, and relatively inexpensive transactions and is easily portable, easy to secure, and easy to transport. That's cryptocurrency. I think this is going to be both good and bad. Short to medium term, somewhere in there, it's bad for prices. Medium to long term, we start seeing this transition. We start seeing an awareness. Now, it's going to be important to see what our current economy looks like in the world a year from now, 2 years from now, 3 years from now. Because we're also going to see a tremendous amount of regulations coming. We're going to see regulations coming faster and faster over the coming months. They're going to do everything they can to make it less likely to be able to use as an actual currency. And anything that can circumvent the current financial system, they're going to do a lot to restrict that. Now, a lot of you say, well, how can they do that? There's a lot of money. There's a lot of big money in crypto. I'm going to tell you, there is a lot of money in crypto, more than ever. There's more mainstream finance in crypto now than we've ever had. However, most of those businesses that are in crypto, the vast majority of their companies' holdings is part of the mainstream finance economic system. They're just in crypto for a quick buck. They're just in crypto because it's really hot and it's on trend right now. But they don't give two craps about whether they stay in crypto or not. They don't believe in this space the same way that I believe it, in the same way that some of you believe it. So the fact that money's in crypto, there's a little bit of legacy money in crypto, a little bit of legacy financing in crypto or big financing in crypto. It's just a little bit in the overall big picture of the market. But I think it's fascinating. I did a video talking about 3 different ways that we could see mainstream adoption. If you've not seen that video, or mass adoption, if you've not seen that video, I encourage you to watch that video, because literally what I'm talking about now, we're watching it play out in the news headlines. By the way, over here, ECB, European Central Bank, scales back stimulus plan. Basically, inflationary policies. They're saying, hey, we got to stop. And they're signaling, if you read this article, that a lot of people are saying, hey, this is a sign that they're about to raise their interest rates. The U.S. is doing the same thing the ECB is doing, as far as they're buying up bonds, basically. Meaning the European Central Bank can't find enough people the European government can't find enough people to buy their bonds. Think about that. So their own central bank says, we'll buy up your bonds. And if that sounds like a shell game, it is. In the U.S., it's the same thing. Our central bank ends up buying our own bonds put out by the Treasury. That's crazy if you think about it, because that just till a couple of years ago, about 3 or 4 years ago, that had never, ever happened in the history of the world. And when all of a sudden you say, hey, a government's going to issue a bond to borrow money, typically countries like China will buy those bonds. China buys a lot of bonds from the U.S., but China didn't want our bonds anymore. The government couldn't find anyone to buy their bonds, so they said, don't worry about it. We'll just buy them back ourselves. If you need to raise money, can you issue a loan to yourself, give yourself money? Like, you can't do that. That sounds ridiculous. It sounds asinine. But that's exactly what the European Central Bank is doing. It's what our central banking here in the U.S. has been doing as well. But what's most important is to understand that this could be a signal to raise interest rates. And the U.S. may be doing the same thing. And what did I tell you earlier? We're going to see inflation increase, which is bad for the economy, or we're going to see interest rates go up. That's also bad for the economy. One of those two things are going to happen. We're going to see runaway inflation, or we're going to see them raise interest rates. Both are terrible for the economy. And I would bet my life we will see one of those happen here in the U.S. as well, probably within 3 months. But if I was going to bet my life, within the year, we'll see that. And all of this just comes back to this video, this article right here. Bitcoin will benefit the new monetary world order, predicts Credit Suisse. Credit Suisse is pretty mainstream. And the gentleman who said this, I covered this in a previous video, was Zoltan Pozsar. This guy used to sit on the New York Fed Reserve. Like, this is not an outsider. This guy is as far of an insider as it could be. And he basically talks about the commodity crisis that exists. Basically, America's money is backed by nothing but the American government, and the American government to be able to tax its people. If you don't understand that, that's how our system exists. The American government and its ability to tax its citizens to raise funds. Well, our tax revenues have not covered our debts for a very long time. So then the American dollar was basically backed by the Americans' ability to raise money by issuing their own debt. so they could pay their bills, because there was always someone willing to take their debt. Well, we've been seeing over the past 5 years that less and less countries are willing to buy our debts. That's why quantitative easing happened, and we started buying our own debt from ourselves. And if that sounds crazy, it is crazy. That's essentially what's happening. I'm oversimplifying it, but that is exactly what's happening. He says a crisis is unfolding, a crisis of commodities, reads the analyst. Commodities are collateral, and collateral is money. And this crisis is about the rising allure of outside money over inside money. Polzar explains that non-Russian commodities are growing far more expensive due to Russia, the world's largest commodity producer, having been sanctioned by the West in recent weeks. Furthermore, the commodities market is far more leveraged now than it was during the 1973 OPEC supply crisis. Thus, traders that are long on non-Russian commodities and shorting their related futures are likely receiving margin calls right now. Let's go down here. The People's Bank of China as the backstop. The bank, being Credit Suisse, also argues that unlike 2008, Western central banks cannot backstop the commodities spread, since they are the ones imposing the sanctions in the first place. As such, the ones that will be incentivized to arbitrage the spread are Russian allies, namely the People's Bank of China. This will theoretically give the People's Bank of China control over inflation in China, while sparking a recession and a commodity shortage, as well as high inflation, as the renminbi, which leaves the crisis and the war as a far stronger currency-backed commodity, while the U.S. dollar inflation leaves it far weaker and less reliable as a world reserve currency. At the moment, the U.S. dollar inflation is already trending at its highest in 40 years, which we already discussed, with January CPI showing a 7.5 price increase year over year. He goes on to say that there could be some benefits to Bitcoin. We cover that in a future video. We are literally watching the struggle of a legacy financial system versus a blockchain financial system. We're watching the potential adoption, the potential mass adoption. We're watching people use this technology to sidestep sanctions. What does this mean for us, and what does it mean for our cryptocurrency investments? I can't give you financial advice. I can only share this from my own perspective. I believe first and foremost that you have to diversify your holdings. And a lot of people are under-diversified. They are only in Bitcoin, or they're only in Ethereum, or they're only in Ethereum type projects, or layer 1 type Ethereum projects. And I'm telling you right now, most cryptocurrency investors are not diversified enough. Here's another thing. It's important to invest in passive income when it comes to cryptocurrency. I genuinely believe that it's important that you have passive income assets that you're investing in. Something that is helping you. You understand, if you make 20% a year on your cryptocurrency asset, that means you've decreased your risk by about 20%. If you are making 5% a month in cryptocurrency, then assets, and there are high risk projects that pay 5-10% a month even. And if you have something paying that amount or more, then even though the underlying project could be risky if it's paying that much, but at the same time, that percentage that it's paying you is helping you offset some of your risk. I recently did a video showing that I was earning over $26,000 in the month of January from passive income projects. Now, I'm not telling you that you should invest in any of those projects. And I'm not telling you that your diversification should stop at only those projects. It really depends on your money management, where you're at, and your risk tolerance. But it's important, I believe, that we stay well diversified and that we invest a portion of our portfolio into passive income projects to help offset the risk of just holding Bitcoin. Do you know how boring it is to hold Bitcoin right now? I remember the first time I was investing in cryptocurrency, I got all excited. I finally made the decision, I'm going to do this thing, right? So I go in, I get all excited, and then you're waiting for, this thing's going to take off. It's going to be awesome because the cryptocurrency goes up so much, right? And you wait, and you wait, and you wait. And it's like crickets. It wasn't until I found passive income projects that I realized, wow, I can buy something and it almost immediately is kicking off a passive income. And if you want to learn more about passive income inside of crypto, go down and subscribe to our Crypto Passive Profits newsletter. It's totally free, by the way. But I was sitting there and I was like, wow. So, what's going to happen with crypto? What's going to happen in Bitcoin? It wasn't until I understood that I needed to buy and hold. Because in the early stages, I was trying to buy like a lot of people, thinking it was going to pop and then I was going to sell. Now I understand this technology. I understand how it's going to change the world. I'm not looking to sell my hodl bag of Bitcoin or Ethereum and the several half dozen other altcoins I hold. I'm not looking to sell those things no time soon. So I really don't care if they double or triple or quadruple or 10x in price. I'm still not going to sell them because I understand where this technology is going and I have a strong conviction in that. Now, with that being said, I have plenty of passive income projects that are currently paying me tens of thousands of dollars a month in passive income. That's money that I get to use. That's money that I get to use for other investments. That's money that I could withdraw if I wanted to and live on. That's a whole different ballgame. Diversify passive income and understand where this technology is going in the future. Ladies and gentlemen, I believe the market's going lower potentially, but we have to be prepared for the future. Thank you so much for watching. I would love to hear what your thoughts are on what we've talked about today down in the comments. Let's have a discussion. Ladies and gentlemen, I believe that decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.